Hello and welcome. You're watching Closing Bell on Moneycontrol. What a stellar day of rebound it's turning out to be, with the Sensex zooming nearly 900 points and reclaiming that 60,000 mark. Even the Nifty has managed to rebound or recover above that 18,000 mark. What's leading the rally today is the PSU banking pack that's up somewhere around 5%. In fact, mid and small caps, if you look at those two indices, well, they have also gained anywhere between 2 to 3% a piece. Where it's the metals, autos, PSU banks, as I was mentioning, well, these are some of the counters that are leading from the front in today's session. Pharma, however, is snapping the winning streak. In fact, it's the only sectoral laggard at this juncture. Divi's Labs was among the top losers on the index, but it was IndusInd Bank that was gaining somewhere around 5% last time I checked. Well, looking at some of the stocks that are in news this afternoon was Tata Motors. It was gaining after bagging the big contract from the Delhi Transport Corporation. That stock was also not doing that badly in today's session. But before we move on to stocks, let's get on board our guest for today. Nilesh Jain of Centrum Broking joins in this afternoon to look at the market setup and whether or not this rally is actually sustainable or not. Good afternoon, Nilesh. Good to have you on the show. Looking at this rally, well, we saw 4 straight days of losses last week, but going by today's market action, it's a 900-point up move on the Sensex. In fact, it is just about looking at erasing at least Friday's losses in today's session. Do you think it's just a one-off, or do you expect this rally to continue?
Very good afternoon, Nandita. Well, what a good rebound that we have seen today's trading session. There are a couple of development we have seen. Starting with the derivative data development, we have already entered in the monthly FNO expiry for the December series. Now, data shows that the call writers which were active on Friday at 18,000 strike, they are forced to cover their short position in today's trading session, and call writers are shifting their position higher towards 18,200, and put writers are somehow gaining the strength, and they have shifted their position from 17,500 to 18,000 now. Now, looking at this particular development, I believe there will be another 100 to 150 point up move that is expected. It might be possible that in tomorrow's trading session we can expect this follow-up move to continue. And on technical front, if you look at the 50-day moving average, that is coming around 18,200, followed by 21 DMA that is placed at 18,470. So what we have witnessed today is the markets have recovered the losses that we saw on Friday, and it has formed a bullish engulfing sort of candlestick formation on the daily time frame. So that basically considered as a bullish reversal formation, and we expect this momentum to continue towards 18,200 at least on a very short term time frame. And I won't be surprised if we see that kind of level in tomorrow's trading session. Now the base is getting shifted again higher towards 18,000, and if Nifty closes above 18,000 in today's trading session, which seems very much likely, then we expect this momentum to carry forward. Now we are getting more confident in our market. Basically, that is because of the Bank Nifty, which is leading the pack, specifically PSU banking space, and we are still very much positive in the Bank Nifty index for the upside target of 43,000 to 43,500 in the spot. And lastly, if you look at the volatility index, which is trading very much in the comfort zone of the bulls, currently it is trading below 16 levels. And looking at the overall participation from the broader markets, I believe this momentum is likely to continue.
Right, momentum is likely to continue. Santa did arrive on the last street, albeit a day late. But we are not complaining. Moving forward, looking at the PSU banking pack, you also mentioned about the banks. But look at stocks like Indian Bank, IOB, those are some of the counters that are gaining somewhere around 18–19%. What is your call on these stocks going forward?
Well, we are very much positive on the PSU banking space, specifically 3 counters that we are liking from this particular space. State Bank of India, that's a preferred bet for the upside target of 620 to 650 on immediate basis. And positionally, we can expect a target of somewhere around 700 from next 8 to 10 months perspective. And if at all somebody is buying at current level, then stop loss should be kept near about 570. Apart from that, BOB is another counter where we have our positive outlook intact. On the higher side, we expect this counter to move towards 190 to 200 on immediate basis. Stop loss should be placed below 165. And lastly, from this particular basket, we are very much positive on Canara Bank as well. that is somewhere trading around 305, and the outlook is continues to remain on a positive side for 320 to 325 on immediate basis. Stop loss should be placed below 319. And apart from that, see, we have seen a good up move in small cap, small PSU banking counters like PNB, Indian Bank, Central Bank. So these are the stocks where we can expect the momentum to continue, but risk and reward is not certainly favorable. So it is better to stick to the quality names that we have just discussed, and we continue to remain positive on PSU banking space.
Right, SBI, look at SBI, that's up about 4.5% as we speak. But also want to get in your thoughts on some of these metal counters like Hindalco. They are also buzzing in today's session. Hindalco, Tata Steel, all of them gaining in excess of 2 to 3% apiece. What would you advise investors to do with these stocks?
In the global market, we have seen the metal prices have surged, and due to which we are certainly getting some positive action in metal space, and also dollar index, which is certainly in a declining trend and forming a lower top and lower bottom formation. So overall, looking at the global factors as well, we believe that metals are likely to do well in a very short term. We are very much positive on two specific counter from the metal pack. From steel sector side, Jindal Steel and Power, JSPL, that particular counter looks positive, and the declines can be used as a buying opportunity. Stop loss should be placed below 500, and on the higher side 550, 570 and 600. These are the three immediate targets that we are expecting in a short-term time frame. Apart from that, Hindalco, that stock just you discussed, and this particular counter is also looking positive. Any decline towards 430, 420 could be a good opportunity to make a fresh entry for the upside target of 470 to 490 in a very short term. And from a positional perspective as well, on a longer term time frame, we believe that stock is very much poised for a rally towards 550 from next 8 to 10 months perspective.
Right, Nilesh, also want to get in your thoughts on Indian hotels. That stock is up nearly 5% in today's session. What are the charts saying about this counter?
Charts are looking pretty strong, and we have seen some sort of consolidation in last 2 to 3 months. That consolidation on the higher side, it has formed a double top sort of formation near about 350. At the same time, there are multiple supports near about 300 zone. Now, looking at today's reversal, we believe that this momentum is likely to continue towards 325 to 340 in a very near term. So again, the similar views very much intact on this particular counter as well. Declines can be used as a buying opportunity for the upside target of 325 to 340. Keep a stop loss below 300.
Moving on to the pharma basket, if you look at all those diagnostic stocks that saw a fair bit of run-up amid the news flow coming in from China, all of them are under pressure in today's session. If you look at Thyrocare, you look at Vijaya Diagnostics, all of these are under pressure in today's session. Do you think it was just a very temporary bounce on these stocks in the wake of the news flow that is coming out of China and the fears of COVID spreading back home as well? Do you think it was that reason because of which the stocks saw a run up, and now that it will be pretty much moving to those kind of news flow coming in going forward?
Absolutely right, Nandita. If you look at the major structure of all these stocks, be it Thyrocare or Metropolis, where the major structure continues to remain on a negative side, and we have witnessed a lot of consolidation. In between, no doubt, we have seen some sort of a pullback on the back of news flows that is coming across the world, that is rising of the COVID cases. But the major structure continues to remain on a negative side. Any pullback could be a good opportunity to exit from the long position from a short-term time frame. And if you look at Thyrocare specifically, this particular counter has a good base formation near about 600. So stop loss should be kept below 600 for the long position. At the same time, what we believe is that there could be possibility of another round of up move towards 650 to 670. That cannot be ruled out, but use it as an exit opportunity rather than making a fresh entry.
Right, another stock that was in focus in today's session was Suven Pharma. Advent is looking to buy a stake, a sizable stake in the company. In fact, promoters have also confirmed, the management has confirmed to CNBC TV 18 that they will be offloading somewhere around 50% stake, and thereafter Advent will be making an open offer of for an additional 26% stake. Well, on that news flow, the stock is down somewhere around 5%. What is the setup looking like for this one going forward?
See, the particular counter, we have seen a lot of consolidation, and if you look at the major structure, Since 2020, the counter is stuck in the range of near about 400 on the lower side and on 600 on the higher side. So that's precisely 200 point trading range since last 2 years for this particular counter. We haven't seen much of action. At the same time, we are not having any sort of recommendation on this particular counter at current level because the risk and reward is certainly not favorable. Any decline towards 450 to 450, 440 could be a good opportunity to make a fresh entry on the long side with a stop loss below 400, and on the high side 550 and 600. That's the range where we are witnessing some sort of supply coming in. So at current level, the risk and reward is not favorable. It is in the no trading zone. Any decline could be a good opportunity to make a fresh entry for the upside target of 500 to 550.
Right, Nilesh, want to talk to you about Tata Motors as well. It has bagged a sizable order from the Delhi Transport Corporation. If you look at the stock over the last 6 months, it's shaved off. In fact, on a YTD basis, it has shaved off somewhere around 20% or thereabouts. Going forward, do you expect this stock to stage a turnaround, and is it poised for healthy gains in the coming year?
See, the problem with Tata Motors is that we have witnessed a lot of consolidation in this particular counter, and the rally that we have seen in Nifty Auto Basket, this particular counter did not participate. And we are witnessing a lower highs and lower low formation. A gradual decline can be seen on daily time frame chart as well. So, looking at the major structure, we are not expecting any immediate up move in the very short term. But yes, from a positional perspective, let's say from 12 to 16 month perspective, this particular counter can be accumulated and can be bought in a staggered manner. At current level, if you look at the support level, that is placed around 350 levels. So any decline from here could be a good opportunity. Keeping in mind that one should have a time horizon of 12 to 16 months. On the higher side, 420 to 450. These are the two important levels that we can expect stock to test in the very near term.
Also want to point out these defense stocks are flying high in today's session. Masgaon I beg your pardon. Bharat Dynamics, all of these are in excess of 10% or so. How much more upside on the charts for these counters?
I was keeping a track on this particular defense basket as well. Out of this, we are very much on Hindustan Aeronautics Limited, that is HAL. This particular counter, we have witnessed a secular uptrend in last 1 to 2 years time frame perspective, and the trend is looking very much positive. Decline can be used as a buying opportunity. On the higher side, 2800 is the immediate target. Post that, we can expect counter to move towards 3000 zone in next 6 to 8 months perspective. So add in the portfolio. Decline should be, as a buying opportunity should be added in the portfolio. Apart from that, if you look at counters like Mazgaon Dock, Cochin Shipyard, we have already seen a sharp run up, and certainly again risk and reward is not favorable at current level. But yes, all the defense counter PSU stocks are very much in the buy mode. But wait for some healthy declines in these particular counters to make a fresh entry. Those who are already holding the long position can continue to ride this particular rally. We expect further momentum of near about 20 to 25% in the very near term.
Right, Nilesh, also speaking about Zomato, that stock got battered in Friday's session as well, but today it is staging quite a smart rebound. Do you expect this stock to reclaim that 60 rupee mark pretty soon going forward?
60 rupees, I think it's a matter of time that stock may surpass the levels of 60. But the problem is that the counter is hovering oscillating in the range of 70 to 55 since last 6 months. And we haven't seen much of action in this particular counter. We need a decisive breakout above 70 to consider as a bottom formation, and post then we can expect for upside momentum to continue towards 80 to 85. But for that, we need to wait for some sort of a consolidation, which seems likely. And at current level, those who are already holding the long position can continue to remain long with the stop loss below 55. Fresh long position can be initiated, keeping in mind that the stock is very extremely volatile. So keep a stick stop loss below 55. Upside levels to be watch out for on immediate basis would be 62, post and 65. These are two targets which we can expect in the very near term. But the major turnaround will come if stock reaches 70 level on the higher side.
Nilesh, what's your view on Godfrey Phillips? This stock is a high flyer in today's session. It has in fact gained somewhere around 70% in a matter of 6 months. How is the chart setup looking like for this one?
The chart setup looks positive, but it looks slightly illiquid because the volume is not that much and not picking up off lately. but the major structure continues to remain on a positive side with a buy on decline approach. Stick stop loss should be maintained, or I would say trailing stop loss can be maintained near about 1600. And on a high side, this particular momentum may extend towards 1950 to 2000 on immediate basis. Recently, it has also hit its previous all-time high marks of 2100. So that's the next major hurdle to be watched out for. If it takes out 2100, then probably it is likely to move towards 2400 to 2500 from next 6 to 8 months perspective.
Right, Nilesh, before I let you go, I want to ask you if you have any particular target in your mind on the Nifty for this week. How do you expect the Nifty to end this week? In fact, as we head into next year, what are the levels that you expect Nifty to end 2022 with?
That's the most difficult question because this is the expiry week and that too monthly F&O expiry, and we are expecting a lot of volatility. And given the fact that volume may dry up going forward, so we are expecting a broader range for the Nifty index. 1700 on the lower side, it seems to be have formed a short-term bottom. On the higher side, 18200 is it looks like very difficult to take out in this particular week. So that's precisely 400-point trading range for the Nifty index. Whichever side it will break, we can expect further momentum in that particular down direction of another 200 to 400 points. So we can expect Nifty to expire near about 18,200 to 18,300 zone, and this week likely to end on a positive note.
Well, likely to end on a positive note for the week, and 18,200 to 300 is the level to watch on the Nifty. Well, thanks a lot for taking out time and joining us this afternoon, Nilesh. Wish you a very Merry Christmas and a Happy New Year.
Same to you.
And well, for our viewers, well, it's a wrap on this edition of Closing Bell, but do stay tuned to Moneycontrol for more news and updates.